Hello viewers, welcome to my channel. I'm Hasham. So now I'm going to start the problems on evaluation of lease proposals. So far 9 problems I've completed till the last video regarding the journal entries in the books of the lessee and journal entry in the books of lessor. So we have seen 9 problems how to pass the journal entry in the books of lessee and lessor by calculating the finance charges, etc. Now from 10th problem onwards, we have the evaluation of lease proposal. So what are these problems? In these problems, the decision maker have 2 alternatives. A business organization is having 2 alternatives. The first alternative, whether to buy the asset. Second alternative, whether to take the asset on lease. So we should not make the conclusion that always lease is better. No, sometimes lease is not advantageous, buying is advantageous. So now we have to evaluate which proposal is better, buying proposal or leasing proposal. So how to take the decision in this type of problems? We calculate the present value of cash outflow in case of leasing option and present value of cash outflow in case of buying option. So we will compare those present value. So whichever option has a lower present value of cash outflow, that option we select. Or one more alternative, calculate the net present value, net advantage of leasing. The net advantage of leasing is the difference between present value of buying option minus present value of leasing option. So if you get positive net advantage, go ahead with leasing. If you are getting negative net advantage, don't go for leasing, go for buying. So in this way, we take the decision regarding evaluation of leasing proposal. So already so many problems we have done. So if you have watched all the earlier videos, definitely you got a good command on this lease accounting. Otherwise, if you have not watched the earlier problems, if you have joined now, it will be difficult for you. So my suggestion, go to the playlist of my channel, select the subject Advanced Corporate Accounting, select the topic Lease Accounting, watch the starting videos, definitely you will get a grip on this concept, then you come and follow this problem. Now, before starting the 10th problem, I expect my viewers to have a printout of the problems which are given in the link under my description. So take a hard copy printout ready before watching the problems. 10th problem I am reading out. Messrs. J Limited needs an equipment costing rupees 10 lakhs to meet the new quality control norms prescribed by the government. So this company requires an equipment that costs rupees 10 lakh. It is contemplating as to buy or lease the equipment. Again, the company is having 2 options. They can buy the equipment or they can lease the equipment. They can take the asset on lease. A sales tax of 4% is payable on purchasing the equipment. That means when we purchase the equipment, we have to pay 4% sales tax. So 10 lakh plus 4% of 10 lakh. Then the life of the equipment, which is to be depreciated at 40% per annum on WDV method, is 5 years and will fetch a residual value of 5% of the original investment including tax. That means if we buy the asset, the life of the asset is 5 years. Life of the asset 5 years, and depreciation is provided at 40% on WDV method, written down value method. Every year 40% depreciation on WDV method. Life is 5 years and the residual value is 5% of the cost including sales tax. The residual value is 5% of cost. The cost is 10 lakh plus this 4% is this sales tax. So 4% of 10 lakhs comes to 40,000. So 10 lakh 40,000 is the total cost of the equipment including sales tax. So 5% of 10 lakh 40,000, that is the residual value at the end of the 5th year. These are the information given for buying the asset. Now lease period, if we take the asset on lease, then lease period is also 5 years, and management fee 1% of investment cost payable on signing the deal. Management fee has to be paid if we take the asset on lease, 1% of the cost. But this management fee will be paid only once at the time of signing the deal. Then annual lease rental 3 lakh rupees payable in arrear. Payable in arrear means end of the year. First year end 3 lakh, second year end 3 lakh, third year end 3 lakh, like that up to 5 years. The lease rentals are also subject to sales tax of 4%. That means when we pay the lease rental of 3 lakh rupees, 4% sales tax will also be added. And Messrs. J Limited has a marginal tax rate of 40%. And its required return on capital is 12%. So complete information is given if we take the asset on lease or if we buy the asset. The complete information is given. So we calculate what is the present value of cash outflow in buying the asset and present value of cash outflow in case of leasing the asset. In both cases, we will find out what is the present value of cash outflow. First of all, PV, present value of cash outflow in buying option. If we buy it, what is the cost of the equipment? 10 lakh. 10 lakh rupees. Add sales tax at the rate of 4%. Sales tax 4%. 4% of 10 lakh 40,000. So 10 lakh 40,000 is the cost including sales tax. From this, we are going to get the advantage, tax advantage on depreciation. See here. Income tax act says when you use the asset in your business, depreciation is allowed. When depreciation is allowed, our income tax liability will decrease. That means if we take the asset on buying, if we buy the asset, we will get depreciation. By debiting depreciation to profit and loss account, our income will get reduced. When income will get reduced, we will save the tax. We'll get the advantage from tax. Tax liability will reduce if our income is reduced. So by buying the asset, depreciation we can get. By depreciation, with the help of depreciation, our tax liability will get reduced. That is called tax benefit on depreciation. The present value of tax benefit on depreciation, this we calculate in working note. So totally we are going to get 3,05,889. This is the present value of all tax benefit which we are going to get in 5 years. How this 3,05,889? I'll show it. Then deduct 7,34,111. From this, deduct the present value of residual value which we are going to get at the end of 5 years. In the problem it is given, at the end of the 5th year, we can sell the equipment and get the residual value of 5%, including the sales tax. What is the cost of the equipment? 10 lakh. What is the sales tax? 40,000. Total 10 lakh 40,000. So 5% of 10 lakh 40,000. Residual value is equal to 5% of 10 lakh 40,000, 52,000. So we are going to get 52,000 at the end of the 5th year. Now we want the present value. Present value of 52,000 which we are going to get at the end of 5th year. So this will be 52,000 into PV factor. PV, present value factor 12% because cost of capital is given 12% at the end of the 5th year. So refer the table. Present value of rupee 1. Don't see annuity. Don't see the table, annuity table. Don't see annuity. See the present value of rupee 1 table in 5th year line under 12% column. 5th year line under 12% column. You will get 0.5674. This is the PV factor. 12% 5 years. Multiply 52,000 into 0.5674, 29,505. This is the present value of residual value. Deduct 7,04,606. 7,04,606. This is the present value of cash outflow in case of buying option. In case of buying. Now I will make the working notes regarding the calculation of benefit on depreciation. Tax benefit on depreciation. Tax benefit on depreciation. First year 1, 2, 3, 4, 5. 5 years. WDV at the beginning of the year. One by one we will complete. What is the cost of the asset? 10 lakh. 10 lakh 40,000. Sorry. The cost of the asset including depreciation is including sales tax. The cost of the equipment including sales tax is 10 lakh 40,000. Now, depreciation 40%. Every year 40% is the rate of debt. So 40% of 10,40,000, you will get 4,16,000. Now tax benefit on depreciation at the rate of 40%. See here. Depreciation we are getting 4,16,000, but the tax rate, it is given in the problem, the marginal tax rate is 40%. 40% is the tax rate. So 40% of 4,16,000, you will get 1,66,400. This is the tax benefit on depreciation we are going to get. Now multiply with PV factor. Present value at the rate of 12%. If you refer the table, present value of rupee 1 at 12%. In the column 12%, for first year 0.8929, second year 0.7972, third year 0.7118, fourth year 0.6355, fifth year 0.5674. These are the 12% first year, second year, third year, fourth year, fifth year. Right? Now multiply 1,66,400 into 0.8929, 1,48,579. This is the present value of tax benefit. Present value of tax benefit on depreciation. This is the tax benefit. Multiply with present value factor. We'll get present value. Now second year. Now see here. First year 10,40,000 was the WDV at the beginning of the year. How much depreciation provided? 4,16,000. Deduct 10,40,000 minus 4,16,000. You will get 6,24,000. This is the WDV for the second year. WDV for the second year. So 10,40,000 minus 4,16,000, 6,24,000 into 40%. 6,24,000 into 40%. 2,49,600. This is the depreciation for second year. Second year debt. Now tax benefit on debt. So 40% of 2,49,600, 99,840 is the tax benefit. Multiply with PV factor, we'll get PV of tax benefit. Present value of tax benefit. 79,592. Now third year WDV. So second year WDV 6,24,000. Second year depreciation 2,49,600. 6,24,000 minus 2,49,600. You'll get 3,74,400. This is the WDV at the beginning of the third year. At the beginning of the third year. Now 40% depreciation on this amount. 40% of 3,74,400, 1,49,760. This is the depreciation for the third year. Now tax benefit 40% of 1,49,760, 59,904. This is the tax benefit on depreciation. Multiply with PV factor, you will get 42,640. This is the present value of tax benefit. Now fourth year. Third year 3,74,400 minus 1,49,760. You will get 224,640. This is the WDV at the beginning of fourth year. Now 40% of this 89,856. This is the depreciation. Depreciation. Tax benefit. 40% of 89,856. 35,942. Into PV factor. PV of tax benefit. Fifth year. Last year. Fourth year 2,24,640 minus 89,856. You will get 1,34,784. Into 40%. This is the depreciation. Tax benefit into 40%. You will get this one. Multiply. Take the total of PV of tax benefit 3,05,889. So 3,05,889 is the present value of tax benefit on account of depreciation, and this will be, you will get this tax benefit on depreciation will get only if you own the asset, if you buy the asset. So this 3,05,889 is deducted. So ultimately present value of cash outflow in case of buying option 7,04,606. Now we will calculate what is the present value of cash outflow in case of leasing option. In case of leasing. Lease management fees. It is given in the problem. Lease management fee 1% of the cost of the asset including sales tax. Including sales tax. So including sales tax, the cost of the asset is 10,40,000. So 1% of 10,40,000, 10,400. So lease management fees payable is 10,400. But Income Tax Act says lease management fees will be allowed as a deduction in computing the taxable income. For calculating the taxable income, the lease management fees paid will be allowed. So we are getting tax benefit. Tax benefit we are getting in case of lease management fee. How much tax benefit? 40%. To calculate tax saving in lease management fee, 40% of 10,400. 40% of 10,400, 4,160. So 4,160 we are getting the tax benefit. So what is the net amount of payment? Net lease management fee payable at the time of signing the leases agreement, 10,400 minus 4,160, 6,250 is the net management fee payable. Because we are paying 10,400, but we are getting the advantage of tax. Our tax liability will get reduced. Our tax liability will get reduced by 4,160. So deduct the tax advantage. The net amount of lease management fee is 6,240. This will be paid at the time of signing the agreement. Now annual lease rental 3 lakh rupees. It is given in the problem. Every year 3 lakh rupees annual lease rental plus sales tax. Lease rentals are also applied. Sales tax will be applied to lease rental. It is given in the problem. Sales tax is applicable even to lease payment. So 4% of 3 lakh, 12,000 rupees is the sales tax. Total 3 lakh 12,000. Minus tax benefit at the rate of 40%. When we pay the lease rental will also be allowed as a deduction for computing the taxable income. For computing the taxable income, lease rental paid will be allowed as deduction. Now, tax benefit 40%. 40% of 3,12,000, 1,24,800. Deduct 1,24,800. Net annual lease rental payable is 1,87,200. The net annual every year lease rental payable is 1,87,200. Right? Now, present value of lease rental. Now we want to find out what is the present value of all lease rentals payable in 5 years. So first of all, year 0, 1, 2, 3, 4. 0 year I am taking because at the time of signing the agreement some amount is paid. Lease management fee. What is the lease management fee? 6,240. So 0 year net lease rental 6,240 management fee, lease management fee. PV factor at the rate of 12%. Again, if you take out the table, PV of rupee 1. 0 year always you will take the present value factor 1. Always, not only in this problem. Wherever 0 year comes, take the present value factor as 1. Then for first year 0.8929, same values I have written here. 0.8929, 0.79672, 7118, 6355, 5674. These are the PVA factor. Now multiply 6,240 into 1, 6,240. First year, second year, up to 5 years, same 1,87,200 is the net lease rental. Net lease rental. Multiply with PV factors to get net PV of net lease rental. Present value of net lease rental. Multiply with PV factors. Now take the total. 6,81,059. This is the present value of lease rentals. The present value of all lease rentals in 5 years comes to 6,81,059. Now I am calculating net advantage of leasing. What is the advantage of leasing? So we compare the buying option cash outflow and leasing option cash outflow. What is the cash outflow in buying option? 7,04,606. What is the cash outflow in leasing option? 6,81,059. Where the cash outflow is less? In leasing. In leasing option, the cash outflow is less. So we prefer leasing. We suggest the company don't buy the equipment. If we buy the equipment, the present value of cash outflow is 7,04,000. If we take the equipment on lease, the present value of cash outflow is only 6,81,000. So our cash outflow is less in case of leasing. What is the net advantage of leasing? PV of cash outflow in buying option minus PV of cash outflow in leasing option. So in buying option, 7,04,606. In leasing option, 6,81,059. Subtract, you will get 23,547. 23,547 is the net advantage of leasing. By taking the equipment on lease, we will get an advantage, benefit of rupees 23,547. That's it. This is the first problem on evaluating the lease proposal, whether the company should buy the asset or should lease the asset. So this is the complete explanation procedure. So after watching this video once or twice, definitely you will be in a position to evaluate. How to evaluate the buying option proposal and leasing option proposal. Come on, now we'll start the next problem. Problem number 11. See the problem carefully. Messrs. Pravek Limited can purchase an asset for rupees 25 lakhs whose life is 5 years, after which it can be disposed of for rupees 5 lakh. Again, it's a problem of whether to buy the asset or to take the asset on lease. Buying or leasing, that is the problem. So the cost of the asset is 25 lakh and the life is 5 years. After 5 years, it will fetch a scrap value of rupees 5 lakh. The use of the asset will result in an incremental revenue of rupees 15 lakh per annum. However, the operating expenses will also increase by 7 lakh per annum. So in this problem, the new point given is, we are given the incremental revenue and incremental expenses after purchasing the asset. So if we get the asset, if we use the asset, our revenue will increase by 15 lakh and expenses will increase by 7 lakh. The firm provides depreciation on straight line method. Straight line method means cost minus scrap divided by life. What is the cost of the asset? 25 lakh. Scrap value 5 lakh. So 25 lakh minus 5 lakh, 20 lakhs divided by life. Life is 5 years. So 20 lakh divided by 5 years, you will get 4 lakh. So annual depreciation 4 lakh rupees constant every year. Now its cost of capital 10% and the marginal rate of tax is 50%. The firm can also lease the asset. So first paragraph, the details are given for buying the asset. Second paragraph, the details are given for leasing the asset. The firm can also lease the asset for an amount of annual rent of rupees 6,50,000. Annual lease rental is 6,50,000 for 5 years. The expenses will increase only by 6 lakh per annum. Whereas if we buy the asset, the expenses are increasing by 7 lakh. Whereas if we take this asset on lease, our expenses will increase only by 6 lakh per annum. Evaluate the proposal. Now we have to evaluate both the proposals. The proposal to buy the asset and the proposal to lease the asset. So we'll calculate what is the net present value, because cash inflows and cash outflows are given. First of all, buying option. We are evaluating the buying option. Calculation of PV of cash inflow, present value of cash inflow. Year 1, 2, 3, 4, 5. 5 years data is given. Incremental revenue. Every year, the incremental revenue is 15 lakh. Inflow. The inflow of cash is 15 lakh every year. And the expenses, every year incremental expenses are 7 lakh. The revenue minus expenses will get the profit. So here revenue 15 lakh, expenses, incremental revenue expenses are 7 lakh. Depreciation 4 lakh. Just now I told you straight line method. 25 lakh minus 5 lakh divided by 5 years. So 4 lakh rupees annual depreciation. 4 lakh annual depreciation. Now deduct revenue minus expenses minus depreciation. You will get PBT. You will get PBT. Profit before tax. PBT stands for profit before tax. 15 lakh minus 7 lakh minus 4 lakh. You will get 4 lakh rupees. So 4 lakh rupees profit before tax. On this PBT, tax is there at 50% given in the problem. Income tax 50% we have to pay. So tax 50%. 50% of 4 lakh comes to 2 lakh. 2 lakh rupees tax. Then profit after tax. So PBT minus tax, you will get PAT. So PBT 4 lakh, tax is 2 lakh. 4 lakh minus 2 lakh is 2 lakh. This is PAT, profit after tax. Now cash inflows, CFAT. Cash inflows is equal to PAT plus depreciation. Profit after tax plus depreciation will get cash inflows. So cash inflows is equal to PAT plus debt. PAT is 2 lakh and depreciation is 4 lakh. So 2 lakh plus 4 lakh is 6 lakh rupees cash inflows. Now year 1, 2, 3, 4, 5. Fifth year I have taken twice because this fifth year is for operating and this fifth year is for salvage. At the end of the fifth year, the asset can be sold off and fetch a scrap value of rupees 5 lakh. So we are getting a regular inflow of 6 lakh. Every year cash inflow, regularly operating cash inflow, we are getting 6 lakh. Apart from that, fifth year end, we are also going to get scrap value of the sale of asset, 5 lakh. So here PV factor is at the rate of 10%. You take out the table present value of rupee 1 table. At the end of 1 year, 10%. 10% rate, first year 0.9091, second year 0.8264, 0.7513, 0.6830, 0.6209. For fifth year 0.6209, again for fifth year 0.6209. Don't see the sixth year, fifth year only. Now you multiply the cash inflow with PV factor, PV of cash inflow. Now take the total. PV of cash inflow is 25,84,870. This is the present value of cash inflows. Now, one shortcut method. This is the long method of calculating. These two tables I have prepared mainly to calculate PV of cash inflow, present value of cash inflow. The same calculation we can do it by shortcut method also. Instead of taking all these values in such a big table, consuming a lot of time, we can reduce our time by using shortcut. When the shortcut method will be applied, since cash inflows are constant for all the years, we can calculate the PV of cash flows as follows. If the cash inflows are constant, here you can see the cash flows are 6 lakh, 6 lakh, 6 lakh, constant is there. So why to find out the PV of cash inflow by using this table? We can make the shortcut method if the cash inflows are constant. So annual incremental revenue is 15 lakh, annual incremental expenses are 7 lakh. So 8 lakh minus depreciation 4 lakh. So every year annual 15 lakh, annual 7 lakh, annual 4 lakh. So profit before tax annual every year 4 lakh. Less income tax 50% 2 lakh. So PAT 2 lakh. To this you add back depreciation. Depreciation is 4 lakh. You add up 6 lakh rupees the annual constant cash inflow. So instead of making this whole table, we can calculate like this. Annual constant cash inflow 6 lakh. But apart from that, these are the operating cash inflow. Apart from that, we are getting scrap value at the end of the fifth year. So to find out that, we are making a table. Year 1 to 5, first year to fifth year, every year, first year, second year, third year, fourth year, fifth year, we are getting 6 lakh. Now PV factor at 10% annuity, PV of annuity. Annuity factor we will take only if constantly every year we are getting. Every year if we are getting the same amount continuously, then we take the annuity. So this 6 lakh rupees we are going to get annually every year. First year, second year, third year, fourth year, fifth year. That's why we will make use annuity factor. The PV of annuity factor 10%. If you refer the table, 3.7908. 3.7908 is the PV of annuity value at 10%. Multiply 6 lakh into 3.7908, 22 lakh 74,480. This is the PV of cash inflow of operating income. Operating income 6 lakh. Now one residual value, scrap value, we are going to get 5 lakh. When we are going to get? At the end of the fifth year. At the end of the fifth year, we are going to get 5 lakh rupees. Here we will make use PVF. Don't use annuity. Annuity we will make use if we continuously are getting. This 5 lakh rupees we are not getting continuously. We are getting only once at the end of the fifth year. Only once we are getting. So PV of rupee 1. PV of rupee 1 at the end of fifth year at 10% rate. At 10% factor, fifth year, only fifth year, you will get 0.6209. Now multiply 5 lakh into 0.6209, 3 lakh 10,450. Add up PV of cash inflow 25,84,930. Now you can compare. By making this table, we got 25,84,870. Here we are getting 25,84,930. So small difference, 60 rupees difference we are getting. That 60 rupees difference is negligible because it is rounding off error. Rounding off error, that is called. 60 rupees is an insignificant amount compared to 25 lakh. Compared to 25 lakh rupees, 60 rupees is insignificant. That is ignored. So here, this is the alternative method of calculating PV of cash inflow if the cash inflows are constant. Right? Now, cash outflow. What is the cost of the machine? 25 lakh rupees is the cost of the machine. Now, net present value, NPV. So, NPV is equal to PV of cash inflow minus PV of cash outflow. So, what is the PV of cash inflow? 25,84,870. Take anyone, this one or this one. Anyone you can take because 60 rupees is negligible amount. Ignore. So, I am taking this one. 25,84,870. This is the PV of cash inflow. Minus PV of cash outflow. Outflow is 25. Subtract. You'll get 84,870. So 84,870 is the NPV, net present value in buying option. If you buy the asset, this is the NPV. Now we evaluate the leasing option. If we take the asset on lease, there is no cash outflow. There is no cash outflow. We don't have to spend the money in the beginning. No cost at all. So only revenue will get. So how much annual revenue? Incremental revenue 15 lakh for both the cases. Whether we buy the asset or whether we take the asset on lease, the incremental revenue is 15 lakh. Minus incremental expenses 6 lakh. There in buying option, incremental expenses were 7 lakh. Buying option 7 lakh. Leasing option incremental expense 6 lakh. So deduct 15 minus 6, 9 lakh rupees. Minus lease rental. We will not get depreciation. In this leasing option, depreciation will not be allowed by Income Tax Act. Income Tax Act will not allow depreciation. So lease rental. Every year lease rental is payable 6,50,000 given in the problem. So 9 lakh rupees minus 650 PBT. Profit before tax is 2,50,000. Profit before tax. Less income tax 50% we have to pay 1,25,000. So cash flow after tax 1,25,000. So every year we are going to get a cash inflow of rupees 1,25,000 every year. For how many years? 5 years. For 5 years. Now the above cash inflow of 1,25,000 is constant for all the years. So PV of cash inflow is calculated. So instead of making this table, we can apply this formula. We can apply the formula to calculate PV of cash inflow. What is the formula? Constant annual cash inflow into PV of annuity factor. Here 6 lakh rupees is constant cash inflow and we are multiplied with PV of annuity factor. Same thing I am doing. PV of cash inflow is equal to constant cash inflow into PV of annuity factor 10% for 5 years. So PV constant cash inflow 1,25,000 and PV of annuity factor 3.7908, same value 3.7908. So 4,73,850. So 4,73,850 is the NPV, net present value. PV of cash inflow or NPV, both are same because there is no outflow. Outflow is 0. PV of cash outflow is 0. So NPV is PV of cash inflow minus PV of cash outflow. Here you have written the formula. NPV, PV of cash inflow minus PV of cash flow. In leasing option, there is no outflow at all. There is no cost. So PV of cash outflow 0. So how much is PV of cash inflow? 4,73,850. 4,73,850 minus 0 is equal to 4,73,850. That is the NPV of leasing option. Now NPV of buying option 84,870. NPV of leasing option 4,73,850. Now compare which option NPV is more. The NPV is more in leasing option. So ultimate conclusion, it is advantageous to take the asset on lease since its NPV is more. Finally, we give the decision, we give the suggestion to the company to go for leasing. If we take the asset on leasing, our NPV will be more. That's all. So this is the end of problem number 11. The these two problems we have done on evaluation of leasing proposal. Whether from the business point of view, leasing is better or buying is better. We have evaluated. So if you are satisfied with my lecture, give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance their knowledge, get the confidence on the subject. So I'm getting many comments on my lectures that students wants important like this. This is not a shortcut channel. I'm giving the lectures mainly for gaining the knowledge, not just to pass the examination. Just if you get 50% marks, you are passing the examination. What you can do until unless you have the confidence on the subject, confidence on your degree. So for that purpose, watch the video for knowledge purpose, not simply to pass the examination, right? So if you have not yet subscribed, subscribe my channel. We'll continue the next problem in the next video.